Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really glad to have with me for the first time Jeb Handwerger. Welcome, Jeb. It's good to have you with me.
Thanks, Jay, for having me on your show. It's a real honor to be here today.
It's an honor to have you, and I might say, as a bit of introduction, since you've not been on our show before, that just tell our folks that Jeb is an author, speaker, and he's a founder of Gold Tracks Trades. He studied engineering and mathematics at the University of Buffalo and earned a master's degree at Nova Southeastern University. And after teaching technical analysis to professionals in southern Florida for over 7 years, Jeb began a daily newsletter, which grew to include thousands of readers from over 40 nations. And you can subscribe to this letter. It's a free newsletter at goldtracks.com, goldtracks.com. Well, Jeb, I'd like to ask you now, we've had a pretty tough year this year for those of us that were invested in the precious metals. Pretty tough. I mean, some people are telling me it's the toughest in 30 years. Do you see any game-changing factors that we need to look at as we head into head into this year, into 2015?
Well, Jay, you mentioned about 2014, and there were some game changers really in the second half of 2014. And related to your intro, the recent turmoil in the financial markets, what we've seen with oil collapse 50% in a 3-month span, and we've seen the precious metals and the sell-off in the resource sector. I believe the recent turmoil is really the geopolitics here that you're discussing are so important with Russia. When Russia and the annexation of Crimea, the G7 nations said that they'll do whatever they can to punish Russia. And this recent foreign exchange volatility where you have, on one hand, a collapse of the ruble and massive inflation in Russia and in Europe and Japan, whereas you have the dollar strong compared to those other indices. But the dollar is really not strong. It's just strong compared to the relatively other weak currencies which are collapsing. And it's important for investors and people who are following this market to remember that now wars are being fought without bullets, but they're utilizing foreign exchange in the commodity markets to really punish these countries that have been sort of threatening to go off the dollar as a reserve currency. And this has been going on for a couple of years, and I've been writing about it in my newsletter. Increasing trade wars. We're not just seeing it between Europe and Russia, but we're seeing it between China and Japan in the South China Seas. We're seeing the Saudis boosting oil output, cutting the price to below $60 a barrel. And what this could have been is a payback to Russia, who's been supporting the Assad regime in Syria. And concurrently, we have the U.S. central bankers cutting back on QE, or this taper. So this is allowing the dollar to rise. So this rising dollar and low oil prices is devastating to some of these nations that have been sort of threatening the U.S., Russia, Venezuela. But as you said in your intro, we have to be very careful how this is going to affect our own domestic industries. The U.S. and Canada has had a huge boom in the oil shale over the past few years, and there's a lot of questions that remain in 2015. How much of this collapse in oil prices? When the annexation of Crimea occurred, many investors were expecting oil prices to skyrocket. This was the same time when ISIS the tensions with ISIS were increasing, and all of a sudden you see this major collapse. And there's going to be some banks that are going to be affected by this because they're sitting on a ton of these energy loans. And I think that there could be some defaults that could increase in 2015 if we don't have a V-shaped quick reversal in these oil prices. Remember, the banks are already in trouble from the last, I don't know how out of the woods they're out from the real estate debacle where, in their greed, they gave loans to really anybody. You want the money, take the money, and then people couldn't pay it back. So there's hundreds, billions of dollars of bad loans still being held by these banks, and I question how with the these loans related to the energy sector, if the banks are really in a dangerous situation here. So there's a lot of factors that I'm, going into 2015 that investors need to have in the front of their mind, and the most exciting part of it is that really you have decade lows in the venture and in the resource sector, and whereas you have a almost parabolic move in the equity markets, as you mentioned before, with this megaphone pattern, this volatility at a top on low volume is really a jaws of death, as you mentioned before. So investors really need to look at this time period to see how to reevaluate their portfolios right now.
Yeah, well, you make a good point. You make several good points. I mean, the idea is that on the resource stocks were down at lows that are as low as anything I've seen in a long time, and I've been around this game longer than you, I must admit. And on the other hand, you have this massive jaws of death that Dr. Robert McHugh talks about, this widening of the highs and the lows, and what that historically, in fact, in his book, he pointed out that all the major declines that we've had in recent, since 1930, have been have had these jaws of death formations. But of course, Jeb, the mainstream will tell us this time it's different. They're always find a way to keep pumping, just as it did in the housing market, to keep pumping. The game is a lot of fun. The party is going strong. Don't take away the booze, right? So they keep on keeping people misinformed, essentially, I think. And so I think that's what our job is, and I know that you feel that way as well. So I'd like to ask you then, how do you see things shaping up in 2015, given these issues? I mean, it's really, the timing is the difficult thing, Jeb. I have no doubt in believing that sooner or later the equity markets are going to come down hard or substantially, and the resource markets are going to have their day in the sun again. But what is the timing of it? That's the problem.
Right. And I think the way to understand the timing is to take a look at history. The last time we saw this divergence between the S&P 500 and let's say the XAU or the HUI or the TSX Venture was in that dot-com boom, when the resource sector was completely ignored, and the dot-coms and the Dow stocks in the late 90s, there was also a lot of investors were taking large margin positions to invest in Dow dividend stocks. I remember in the late 90s, and no one would touch resource stocks after the venture. Well, the XAU went from a low of around 50 and hit in 2007 200. So it quadrupled the last time it made this diversion. So when you're buying into a bottom, the key is that you may keep on buying, and it may be lower, but that's that's how you accumulate, is in a bottom stage of a market. And what we're seeing in the XAU is levels not seen since the 2008 crash, not seen since 2002. Could it hit the 2000 low a little bit more, which it's a possibility, but the upside here, potential, and that's why investors go into the junior mining sector, is the upside potential. And it's crucial for investors to remember right now that the gold miners, the majors, are constantly on the lookout for quality projects. This that could improve their balance sheets and their long-term goals. They're looking for good grades, infrastructure, favorable geopolitics, and the exploration industry has been suffering for the past few years with a lack of capital and being able to finance. So the pace of development of these projects has significantly slowed down, and that's why there's a potential for a supply shortfall in gold and possibly gaps higher in price in 2015. So it's an exciting time.
Yeah, it is, and of course it's paradoxically so. It seems as though when in your gut, when nobody else is buying stuff is when you want to, and when everybody is manically buying, that's when you want to sell. Easier said than done, of course. But the great investors of the past, I'm thinking of Bernard Baruch, said that one of the reasons he was so successful was he always sold too early. And Rick Rule's another example, I think, of someone who's done remarkably well in selling too early. But then he has the cash to go out and buy things. So I suppose, Jeb, you really do look at fundamentals, don't you? You use technical analysis as a timing tool, but you are probably looking for companies now that are really cheap, that have great quality, good, strong balance sheets, and can survive this downturn, even if it lasts a little longer. Is that your approach?
And that's exactly my approach. And you have to look, what are the majors looking for? And they're looking for quality, not necessarily quantity. In the recent M&A activity, another point that's important for investors to realize is to take a look at the gold-oil ratio. The gold. Even though gold went up to 1900, the gold-oil ratio back in 2011, oil was also very high. This cut into a lot of the profits and the ability for these large miners to pay dividends because it raised the cash cost a lot significantly. Oil prices are a big, significant cost for these major miners, especially these big open-pit mines. So now the gold prices, if you take a look at the gold-oil ratio, which I have a chart on my website, goldstocktrades.com, that it's the highest it's been in years. So, we may see a surprise out of some of the majors in 2015. Everyone's counting the miners out and no one's willing to touch them. But you know what? The large miners, Newmont, Barrick, they have some real high quality projects in Nevada, where they're the most profitable gold mines in the world, and they're going to have their costs. I think are going to go down significantly because the gold price has recently held in despite the oil collapse.
Exactly. It's exactly right, Jeb, and especially those that have bulk mineable companies that have to move enormous amounts of rock to get an ounce of gold out. You mentioned also the time for the seniors to take over the juniors. One company that I've had on my list is Paramount Gold and Silver, and they've just there's announced Coeur d'Alene is looking to take over them, and that sort of makes me unhappy because I believe that Paramount has tremendous upside potential with his gold and silver resources, both in Mexico and also in Nevada. But I think that you're right. I think there's going to be a lot of great opportunities. So then you look at a company like Coeur d'Alene that's selling at reduced prices, but it has a strong balance sheet, can go out and buy these assets. I want to ask you, with just a couple of minutes left yet, Jeb, you had some success stories in 2014 despite the bad market, I believe. Would you care to mention one or two of them before we conclude?
Yeah, well, it was tough to have success stories in gold in this bear market. I do look at other metals. One of the big stories in 2014 was the Tesla announcing that they're going to build a gigafactory in Reno, Nevada. So one of the positions I'm a shareholder and is also a sponsor on my website, Western Lithium, had a significant run in 2014 and part of that was the Tesla excitement and their plans to build a major $5 billion gigafactory in Nevada near Western Lithium's Kings Valley deposit, which is probably one of the best undeveloped lithium deposits in the United States. I also highlighted NioCorp, which is I'm also a shareholder of and is also a sponsor on my website. I followed this for a couple of years. The company, it's a niobium asset, but niobium is a critical metal. It's used in steel to make to reduce energy consumption. And this is one of the highest grade deposits in North America, and most of the production comes from Brazil. And they had a key CEO that came onto the company in about 2 years ago, or a year and a half ago, and the stock's been up over 500% since the new management's come on board. And So you have to look throughout the sector. Sometimes you have to look out at gold. But within gold, we've had a couple of success stories with Corvus and Canamex in 2014. Companies that have been able to finance good management teams, good jurisdictions, and they're responsible to the shareholders. And that's what I'm constantly looking for and doing due diligence to make before they become a shareholding or they become a sponsor.
Sure, absolutely. Well, that makes all the sense in the world because you want to have the company's management's interests aligned with you as a shareholder. Unfortunately, Jeb, we're out of time. I wanted to ask you just real quickly, what metals do you look at in 2015? If you 30 seconds, if you can tell us.
Okay, I think that it's the battery, lithium-ion battery, lithium and graphite is going to continue to be a big story. I think the platinum group metals. There's very few quality platinum group metal deposits in North America. Uranium has been doing pretty well despite the oil collapse. Uranium's at, way below 2007 lows when it hit $150. And precious metals, I think, are really undervalued. So it's going to be an exciting 2015.
Well, thank you very much, Jeb. We are out of time. We'll look to do it again sometime in the near future. Thank you so much for coming on with us today.
Thanks, Jay. It's a real honor.